How's it going, everyone? It's Sam. I want to talk to you about what Cathie Wood just said on CNBC. Now, today has been a little bit back and forth. At the beginning of the day, we saw a lot of green. At the end of the day, we saw the Dow up a little bit. We saw the S&P down about 0.5%. And we saw the NASDAQ down again about 2.3%. We've seen a lot of high growth plays being hit hard today. And it was really interesting to watch Cathie Wood talk on CNBC about a wide range of topics. She talked for a while, and I'm going to hit on the major ones that I saw that I thought were pretty powerful, because there are some bombshells that she dropped that are really important for the market outlook, for stocks that she thought were undervalued, for her new update on Tesla and her updated guidance, and a lot of other things too. So if you guys like this, please hit the like button. I really appreciate that. I won't stop you here too long, but if you want to check out the link down below to BlockFi, you can get interest on your cryptocurrency. So she actually hit on cryptocurrency here, and I'll explain it. But in case you want to add some, crypto has actually held up really well the last couple of weeks, so definitely check out that link down below to BlockFi. Again, they pay you a bonus and an interest rate for putting your money there. With that being said, there is a link down there to WeBull. Also, in case you want to sign up, you can get 2 free stocks worth up to $1,850. Just deposit $100. I really appreciate that. And last thing, there is a link down there to my Patreon, so definitely check that out if you're interested. So I'm just going to tell you about some stuff that she talked about, give you the updates that she said for this interview. So she talked again on CNBC, probably about 15 to 20 minutes. They had her through a couple commercial breaks, so she shed a lot of light on the market in general. First of all, she talked about why the market she thought was dipping. So she talked about the 10-year Treasury yield. She said that this was going up at a faster rate than most people thought was going to happen. So not just did it go up, but it also went up at an alarming rate compared to what we were expecting. And she saw the shift into recovery plays, into value plays. Now, they kind of said, okay, well, how are you going to navigate this? You yourself are down compared to some of these recovery plays. And she said, well, we saw this in 2016, right? We saw in 2016 our funds were underperforming, but we were actually excited about this because it broadens the market and almost makes it a little bit safer. Now, this is, again, paraphrased a little bit, but she talked about broadening the market, right? She doesn't want it to be like the tech bubble. She doesn't want all these players to be overinflated and only have a couple really make it through the bubble. She's talking about how now there are a lot more like high value plays or growth plays, but growth plays that aren't gonna get popped because of the decrease in valuation because of the last couple weeks. Then they talked about Tesla. They wanted to hear her updated target because I think it was last week she said that they're actually updating guidance. They're upping their expected price on Tesla. So she said they're hoping to get this out in the next couple weeks, 1 to 2 weeks, and she updated guidance for a couple reasons. She listed actually a lot of reasons. First of all, she talked about how in 2018 they held 17% of the EV market. So in 2018, they were expecting that once the traditional car manufacturers bought in and really bought into this EV story, that they were going to go down from 17% down to 11% of the market share. Now, they didn't see this at all. They actually saw their market share increase over the last couple of years about to 25%. They also talked about how it's about 80% of the US market. They also wanted to hit on the fact that their autonomy is coming faster than they thought. Elon Musk talked about how we're going to have this much faster than previously expected. He was talking about, I think he was talking about giving away for free, honestly, to people that wanted it, but I could be wrong on that. I haven't looked at that, but she mentioned that. Now, they also talk about why Tesla is so much better. She talked about why she thinks Tesla is better than everyone else. First of all, the battery tech cost is much lower. They've been years ahead in the battery technology space, and they're just much cheaper than the competition. Also, they have their own AI chip. So no one else has designed their own AI chip. And she said that it reminded her of Apple back in the day, where they tried to turn to other chip manufacturers, but they just couldn't get done. So now they had to start building them themselves. And now they think that Tesla is going to be far ahead of of these other competitors. They also have more data collected for their AI. So for the autonomous driving, she talked about how really the winner is going to be the one that has the most data. And Tesla obviously is the leader there. Until recently, also, the only manufacturer that could actually improve their technology over software updates. So just downloading new software onto the Teslas, this was the only company that could do this. Now, she said until recently, so there are some other companies now that have this ability. Now, she also goes into crypto. They were asking her about her being so bullish on it, and she was talking about how we've been in this long bull market for bonds, but now she could see more portfolios. Instead of the 60-40 allocation, 60% equity, 40% bonds, she could see something like a 60% equity, 20% bonds, and 20% crypto. Which honestly, if that happened, that would be a huge shift, because right now, even the people that are bullish on crypto often say 5 to 10% of your portfolio. Now, of course, there are people that have 95% crypto or 100% crypto, but generally people say, 5 to 10% of your portfolio you can put into crypto. So if we move to a 60-20-20, that would be a huge move. Now, of course, if you guys want interest on your cryptocurrency, you can check out the link down below to BlockFi. That's who I use. They pay up to 6% on Bitcoin, like I said. Now, they went into the next line of questioning, which is, hey, we've seen some banks that are innovative. We've seen a lot of banks that are behind the times. Do you think that there are going to be banks that can compete with some of the fintech companies? And she said, this is where she took kind of a hard stance, where she said, you don't want to be on the wrong side of change. She said, with some of these companies like Target, Walmart, there are going to be, even Costco, there are going to be companies that don't have to be innovative and they're just a staple. But that kind of leads her into thinking, okay, there are going to be a couple banks that do well, but for the most part, a lot of these are going to be irrelevant years down the line. So we might see a JP Morgan, a Bank of America. She didn't throw these names out there, but we might see a couple of these. But generally, she doesn't think that that you're going to be on the right side of change if you're diversifying across the whole banking industry in the brick and mortar sense. She said that a couple will stay there, but generally she doesn't think this will be a very good industry to buy into. And that's what she kind of led on to saying too, that you don't want to be on the wrong side of change. I think she was also talking about the recovery plays, right? You don't want to start buying into these recovery plays that maybe are hyped up a little bit, but really are value traps. Now, this is the big bombshell that she dropped towards the end. She talked about how they are moving into some of their higher conviction plays. They want to know what she's doing. She's going to move into higher conviction plays. They did this in the past when the market started to dip. They moved their flagship fund from 50-something positions down to 33. She said typically when they're looking for investments, they're trying to get companies that are more pure plays into innovation, but these are a little bit more speculative. She said that they can do that, but when the market tightens up, a lot of these typically sell off. So they try to get into their higher conviction plays. Now, usually they look for a 15% rate of return over 5 years. So they look to double their investments over 5 years. However, at the current price that these stocks are now, she is expecting, and they just talked about this today, she said, they're expecting a 25% rate of return. So she's expecting to 3x over the next 5 years. That's kind of a big thing just to drop in there. She said kind of passingly, but she thinks that there are funds that the tech sector, really the funds, I guess, will 3x over the coming 5 years, which is a big statement to make. That's a bold statement. Now, this makes me pretty bullish on the sector. I was already bullish on tech. I've been buying tech this whole last couple weeks, but it's interesting to see her opinions on this, that she thinks that, this is a really good buying in opportunity. And she's been saying that for weeks. You can see that in some of their funds, right? They're selling out of some, but they're really dialing in on some of their higher conviction plays, and they're getting good deals on some of these. Now, she got the topic brought up to her. They asked, what is the most innovative stock or the most undervalued stock that you've been wanting to invest in or that you see in the market right now? What is the most undervalued stock? And the first thing that she said was Invite. So this is a molecular diagnostic testing space. She talked about how they are aggressively reinvesting in themselves as opposed to some other companies, again, kind of getting into the you better be on the right side of change part. Some companies are just, buying back shares or giving out dividends. She wants them to reinvest and really become market leaders. So when she said this, when she said their name, they went from $31.43, and in about 20 minutes, about 30 minutes, they went up 14%. And this is not a very small company. Now it's not a $100 billion company, but it's valued around $5 to $6 billion. Now it's up to about $7 billion. So there is something to be said for that, right? The Cathie Wood effect. But I just wanted to update you guys on what she said about the market and what she was talking about, what she thinks about different topics that are really relevant right now. Now, I have a video coming out maybe tonight, maybe tomorrow about Cathie Wood, about Ark Invest, talking about NFTs or non-fungible tokens. This is kind of an interesting sector, an interesting space to pay attention to. It's been getting a lot of hype recently, and I want to talk about their opinion on it because they just released it. I'll give that to you guys here pretty soon. But if you guys want, you can definitely let me know what you think about this video below. What do you think about Cathie Wood and what she said about all this? Because I think this is really important to pay attention to, see her outlook. If she started to turn bearish on the tech sector, that would be huge. That would be terrible. So that would be terrible for the sector. We want to know what she's thinking at different times and continue to increase our own conviction on different stocks and different plays. So thank you guys so much for watching. I really appreciate it. Let me know your thoughts down below in the comments. Thank you for checking out WeBull and BlockFi, and I will see you guys in the next video. If you want to see the video that I put out on Workhorse and a new bill possibly for them, check it up out here, and then you can check out the video on BNGO and, a huge price movement and some possible catalysts coming for them soon down here. Thank you.